Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 29th of July, 2020. It is FOMC day, folks. This is one of those days where the game changes a little bit until the release. This is episode number 1807. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall risk sentiment, it looks like it's pretty much a mixed bag. Earnings dominating, of course. The Nasdaq's up 61.75 points. Crude oil is leading the pack, up 0.66%, up 27 cents, trading at 41.31. Remember, API crude stocks came in. There was a draw announced yesterday at 4:30 Eastern. Gold is up another $11.10 versus yesterday's close or settlement. The Russell's up 7 points or 0.48%. The S&P's up 10 points, 0.31%. The S&P, of course, we'll go over that this morning, had a sell-off on the close. The DAX is a laggard today, down 26 points or 0.2%. Overall, I would say leaning towards risk allocation as we come into the U.S. Open here in the next 27 minutes. So that's what the market stance is as we start the day here. Today we have a short Edge Wisdom segment. This is something that I want to kind of keep rolling. This is based on questions that I receive via email, Twitter, direct messages, other venues, brokers, Edge Clears, brokers pass these on to me to answer for traders and so on. Today, however, looking at the calendar, the biggest thing on deck, as I mentioned, is the FOMC rate decision, expecting them to hold at 25 basis points, but that's not really the big picture. The big picture is what they say at the press conference at 2:30 Eastern. Today, what do we have on deck? We did get wholesale inventories this morning. Pending home sales are due at 10 a.m., a half hour after the open. A half hour after that, at 10:30, we have crude oil EIA crude inventories expecting a surplus of 357,000 barrels. The prior is a surplus of 4.892 million. We're looking for the FOMC, and then of course the all-important press conference. So today is almost is one of those days that you have to look at as two separate days, and one the pre-FOMC and a post-FOMC, and that's what we're looking at. In addition to that, we do have, there are earnings on deck after the close. We get Qualcomm today, PayPal, but tomorrow are some of the bigger numbers, the bigger issues. Tomorrow there's quite a bit on deck. It seems like every major company is announcing tomorrow. Some of the huge ones are Total in France, that impacts the Euro Stoxx 50. MasterCard announces tomorrow. PG&E, Procter & Gamble, Comcast, ConocoPhillips, AstraZeneca. These are all before the market opens. International Paper, DuPont, UPS, and Cigna. And then after the close, we have Apple, we have Amazon, and we have Alphabet, the parent company of Google. We have Ford Motors and Facebook after the close tomorrow. Tomorrow is just ginormous in terms of earnings. And today, of course, we have FOMC, and the markets are on hold, as you have noticed over the last day or two. We've been trading in quite a range. Let's take a look. Let's take a look at what was expected yesterday. Yesterday, the primary scenario is a pop higher to push into the 32.30, 32.28, 32.30 area, and I was looking for it to drop below the composite point of control here, the micro composite point of control towards the prior day's low, which was 3207 and a quarter. Remember, we're still one time framing up on the daily. This chart here is a 240-minute full session. So the first two bars or the last two bars of the session are really what RTH is. I'm looking at the full session now because the volume is really translating well into the day session, even though the underlying equities are not trading. And the expectation yesterday is that we were likely to trade in a range. Secondary scenarios, we drop quickly, break the one-time framing down, and move towards 3,200 for a pop higher and finishing around the point of control still. Point of control being 3218, 3218 area. That's what was expected. Here's what actually happened in the RTH. Let's clean this up. This is my trigger chart. Here's what happened. We opened up right in here at 23, and we pushed higher immediately. We pushed into the 30 area. Remember, 2830 is the expected test higher, and then we dropped down into 3212.50. Was expecting more like 32, well, about that, 3212. And then the expectation is it would hold somewhere in the middle here. So this is, again, scenario one, is to push up to 30, push down into 3210-ish, something like that, and then come back and hang out in the 3218.20 area. And it did pretty much that, kind of just stuck in the middle. What we did do by the end of the day, and let's bring the initial balance back. Let's clean this up a little bit. Hello, the initial balance got broken to the top side. You can see there, the initial balance broke to the top side, and it looked like we were attempting a range extension. And as I talked about yesterday, if you recall, I said yesterday is likely to be quite choppy, quite range bound. And wouldn't you say that that's what we got? This was expected, really expected to trade from the outside in, as I'd mentioned yesterday. More of a mean reversion type trading, and with every pop higher, we got a pretty deep pull. Pop higher, deep pull, pop higher, deep pull, and so on and so forth. And then what it did by the end of the day is it took out the IB low, the first hour's low, and it finished near lows, giving us almost a neutral extreme day, not quite neutral extreme down day. If it had finished near the low and maintained there, especially if it had broken the RTH low, we would have likely seen 3,200, and then of course the all-important 3,190, well defended in that area. So right now, the market has defended the 3246 singles, 3245.75 actually. It defended them yesterday in the Globex session coming into Tuesday's trading. They were well defended, so we know sellers were active in the 3246 area. Yesterday's overnight high is 3246.75, and came all the way back and opened inside of the prior day's range. So we had basically what was an inside day yesterday, except we poked through that high a little bit. But overall, we have these overlapping values. The market is in balance coming into the FOMC announcement, and the market's basically in a holding pattern. Yesterday did give up territory to the downside, but don't let that fool you, because we're still holding the one-time framing up. In other words, we put in a higher low yesterday, not by much, but we're still holding higher prices on retests of lows, and we are still pushing highs. So here's the overall picture. We put in that low at 3191.50 after this big impulse day. This is a landmark day, or an important day to track, and instead of continuing the selling, it bounced back up and held sideways. And yesterday was basically just a resting day, a sideways day, and that's what we've got so far. Neutral yesterday, which indicates some dissonance there between buyers and sellers, but overall mean reversion or a return to the center type of day. And today, where are we opening? We are right in the center of it all again. So if we look at where we are today, here's where we're trading currently, 32.2350, right in the meat of yesterday's value area, which is valid between 34.50 and 21, and we are stuck right in here with the point of control at 32.27, and that point of control migrated up 2.25 points from 24.75. Okay, and so that's where we stand. The thing that to note yesterday is, despite the fact that we had an opening price at approximately 23 at 23, which corresponds with 0 on the delta. Even when the market was pushing new highs here, the delta had no participation, and we were essentially not going with price. And finally, they give it up into the close here in the last hour. So overall, it just seemed the delta seemed to make lower lows. Let me expand this out so you can see what I'm talking about here on a better scale. You could see as price was pushing higher, the delta from that same location was pushing lower, and it just seemed like there was just no participation by buyers. Price was moving higher as more on thin lifting, which means that it's the offers pulling higher. Remember, price will move up even if it's just a one lot trading a wide spread. So if the market has a spread 10 points higher and that's the best offer, and a one lot trades, you'll get a candlestick or a bar that shows 10 points. It popped up 10 points, but if it's just a one lot, it's not really impacting the delta. So the delta is really giving us, in my opinion, is giving us a little bit of substance as to how price movement is going versus volume. So it's a very healthy comparison in my opinion. So that's where we stand. Looking at the overnight session, the extended trading hours session, here's the sell-off from yesterday, and we have basically built ourselves a nice balanced profile with 23 down to 14 for a value area and 32.17.5 as a point of control so far in the session. We did slip through that 32.07 quarter, and as expected, we did get a nice flush. This ends the one-time framing up on the full session, but we have to see what it does on RTH. If it's this is probably foretelling or forecasting what is likely to happen for today. So pay attention here. Pay attention here as the market approaches this 3208. It's likely to give it up to 3204, and we're on our way to 3200 with the FOMC. We might see 3190 flush. I'm not saying that that's what I'm hoping for or that's what's going to happen, but this looks very vulnerable to me based on yesterday's session. Overall, the market is kind of creating a trend down in the full session. We went, as I said, to 46.75, the single prints from last Thursday. On the retest in the RTH, we have a lower high, and we pushed a lower low intra-session. And so what we end up with is this channel that looks something like this. If we push the 26 this morning, then the shorts are likely to get squeezed. So pay attention to that overnight high, and we're likely to rotate back up to 35 and then 39, and then the shorts are just toast into the FOMC most likely. If not, then we are likely to hold on to this high volume area, which reminds me, just need to extend this out like that till the end of the session. So we are still holding this high volume node right in here. It has shifted up to 3218. We are kind of stuck in that force field or the attraction point for that high volume node. So let's move on. I mean, I'm I'm not going to. There's not much in the order flow to show this morning, so I'm not going to go over that. I'm not going to spend a few minutes on that. I'd rather spend them on the trade wisdom segment. So let's move into what we're expecting for today. Okay, so what are we looking for today here? First of all, let's just make sure we outline the fact that somewhere in here, oops, somewhere in here, we have FOMC. Capiche? Um, and so here we are trading at 32.23. The most likely scenario this morning is a an open auction that is in range, in value to yesterday, and is likely to attempt to test that 32.26. I'm looking for weakness back to 32.18. The point of control in the overnight session and the MC point of control are on top of each other. We are likely to come back down into this 32.17 area, 32.17.18, and walk ourselves back down. And that brings us into the FOMC, at which point, your guess is as good as mine. But the FOMC, if we poke above this 26, 27 area and start pushing through, remember the 28, 29 has been playing quite a bit lately, and push through, then we are likely to squeeze into 39 and start working our way up to 46 again. If not, then we are looking at the end of one time framing up, and that is likely to entice people to step in and become sellers. And in that case, we are likely to find 3,200 quickly and trickle down into 3190. If the market gets bad news, look out for that 3190, likely to flush pretty hard for a quick bounce up at 3190. That's the direction. As soon as we start selling, that is the biggest target that's sticking out there. Secondary is we open up, we move back into balance, we move back into the overnight balance, and then we get an impulse back up and we squeeze, we start to squeeze into the FOMC and start working our way up for a flush down into the FOMC, more likely, or a potential push into 39, the low volume node in the micro composite, and then start working ourselves back into 46. It's hard to say, and I'm not going to sit here and be a fortune teller. It's hard to say what is likely to happen here. So we'll see what goes on. Let's move on to our Edge Wisdom segment. This is a question that I know a lot of people struggle with. So I'm gonna address it. The complaint is I'm struggling with losses. I can't seem to do anything right. I just want to give up. I do great in Sim, but don't have the talent to crack it live. What am I doing wrong? What am I doing wrong? So how many of you identify with this kind of sentiment, especially in the kind of market that we've been in lately? You can be honest. Nobody knows who you really are. Maybe you're using your real name, but who cares? If we don't have transparency, we're not honest with each other, it's really hard to make progress in trading. This is why an accountability partner is really important. We had a nice discussion about that in our trade talk yesterday, convergent trading. Here are the core issues from my experience and my opinion. The fact is, as traders, losses are going to happen. They're going to happen all the time. There are going to be many, 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 many losses. There are going to be many losses. It's okay. Accept it. It's okay. It's just like poker. You're going to get crappy cards, and you're going to take a lot of losses. Here's the goal. Here's the important thing. The goal is to keep them small. Please keep those losses as small as possible. And that means you define risk in such a way that you're providing yourself with somewhat of an edge in terms of R factor or risk versus reward, so that the loss is small relative to the gain, so that you're not fighting an uphill battle. This is really important. I see a lot of people trade online and stream, and they show, a down day is huge, an up day is about half a down day, and it would take a whole lot of up days to make up for a down day. And you can trade that way. There's certainly people that make money that way, professionally or otherwise. Um, but it's a difficult way to go. It's an uphill battle, right? So our goal is to keep the losses small. The other thing to remember, and this is really tough for traders, remember this is a random outcome game. This is random outcome. The last trade and its outcome doesn't matter. Learn to let it go. Learn to not have it sit there and be on your mind and force your mind to digest it. The brain with information is like the stomach with food. It has to kind of digest it, which requires you to have stress relief, through exercise or something, some distraction. It requires you to have good sleep. That helps the digestion of the things that are going on in your life, whether it's trading or otherwise. Rest is really important. Generally, we sleep less, we abuse ourselves and so on when things aren't going wrong, when actually the opposite needs to be prescribed. But a loss, just let a loss go. It's just a loss. It's a drop in the bucket. It's okay. Just let it go. If you're taking a huge loss, in other words, you just gave up 50% or 80% of your account, then you don't want to let that go. You need to wallow in that. You need to feel its pain, because there's a lesson in there. You should not be repeating that. Don't try to make up a loss. Next, if your edge exists in sim, like this particular trader's writing in, if your edge exists in sim, then execution quality and psychology are the issue. If you're doing it right in sim and you're following your rules in sim and it looks good and you're making all kinds of money, but you go live and it's crap, then the issue is execution, the issue is psychology, the issue is fear, overthinking, analyzing in place. The analysis and the homework has to be done before, and you're just sitting there waiting for the market cue, patiently waiting for the market to come to you. You put the trade on, you define the risk, you define the targets, and your trade management, and that's it. Once the trade is done, bag it, log it, that's it. Move on. Go to the next trade. There's nothing more important in trading than the very next trade. There is nothing more important in trading than the very next trade. That last trade that's distracting you from the very next trade, that last trade is taking you away from the next trade. The only thing that matters is the here and now, and that is the next trade. There's no such thing as talent, this person says, but don't have the talent to crack it. I don't believe in talent. I think talent is overrated. I think talent is a wrong way to think. It's a fixed mindset. There's no such thing as talent. There's just hard work and constant growth. Period. We are constantly changing. We are human beings. We cannot stop in time and freeze frame who we are. We are not born with a brain that functions in a certain way. We just learn and adapt. This is how we've survived for tens or hundreds of thousands of years, or whatever you believe. Study until you trust your edge. That's really important. Just keep pecking away at your understanding of the market. Execute, fearless execution, pure execution, tough, easily said, very difficult to do. Execute, log, learn, move on. That's all you can do. Trading is about sampling, going to the pond and sampling as much as possible. If your edge is positive, it'll show up. Okay. Make sure you have your risk controls in place and trust yourself. At the end of the day, you have to trust yourself. Good luck, and I'll catch you tomorrow. Take care.